Hello and welcome everybody to our show. How you doing? We're financial advisors here at Jazz Wealth. Hope you check us out at jazzwealth.com. But we got a lot of cool things actually to share with you today. It's going to be some geeky stuff, right? And some fun stuff too. So hang out there with us. Before we get started on that, let's take a look at the market. So we got what do you expect honestly from today? And honestly, yesterday as well. The market basically flat. I'm looking at the S&P, showing that to you on the screen. We got the big Fed meeting coming up tomorrow. We're going to talk about that in a second. But no one wants to be ahead of that, right? So the S&P basically flat. And by the way, the S&P here, this ranks as one of the weakest weeks of the year. There are 98% of all other weeks in the year that actually rank better than this week here. So let's take a look. So here's the performance. I'm just going back the last 9 years. If you look at this specific week in the S&P, ranks as the weakest, right? You can see, obviously, last year was a little bit different. Going through back over the previous years there, most of the time this week tends to be a weaker one. Why is that? Well, it's a Fed meeting, right? So September, we know, if you want to see, actually, I shared this with clients. We know that September gets weak towards the later part of the year, on average. Right? I'm not saying it's going to happen now. I hope it happens. But September tends to get weak towards the second half of the month. Well, if you look at the last 9 years, how does September perform in this week, which would start the second half of the month? A lot of weakness there. And you know, we got the Fed meeting there. So it's what you got. If you look, to me, there's a little something interesting here. So we're going to be a little geeky for a second. We're going to talk about the moving average spread, so the price versus the moving average. And we're going to talk about the advanced decline line, which is just the number of stocks advancing versus declining, and they use a 10-day average to smooth things out. Well, normally these things work together. So I'll stick with you here for a second. I'm going to explain this because I don't know if we've ever done this. So the first thing we got to note is that, now this is the S&P. The S&P has moved into what is known as extremely overbought. So it's over 2 standard deviations away from its 50-day moving average. Okay, fine. That's okay. The market can remain extremely overbought for a long time. And there's an old saying there, the market can remain irrational more than you can remain solvent. Irrational being like, oh my God, when's it going to fall? Or when's it going to drop or rally or whatever. So the market over 2 standard deviations away from the 50-day moving average. Now, normally when that happens, it's because you have this rally, right? So usually there's some form of broad excitement where lots of stocks in the S&P are moving higher. People are buying the index, which causes individual stocks inside the index to go higher. It's normally, right? That's normally what you see. Well, here's the problem. The advanced decline line, meaning the number of stocks versus, going up versus going down, is actually negative. Right, so here's the zero line there. It just tells you that there are more stocks trending lower, or actually moving lower, than are moving higher. So normally, S&P overbought, advanced decline, high, right? Most stocks moving up. We see the exact opposite here. This sort of approach where we say the S&P being extremely overbought and the advanced decline line being negative, that has only happened 8 other times in the last 35 years. And I'll tell you, the average performance forward for the next 3 months for the market is it underperformed itself. You know what that means? So we say, you know, the average gain on any given day is 0.02% for the S&P, or 0.08%. So if the market performs at 0.01%, that means it underperformed itself, right? And normally the average is X, we performed minus X. So when we look at the advanced decline here, or when we look at the moving average spread versus the advanced decline, there's only 8 other times that's happened, and the market underperforms itself in the next 3 months. Add that to the things that are going on, right? We have the Fed meeting, we got tariffs, we got, unfortunately, assassinations, right? We have a lot of this, that doesn't affect the markets, but we have a lot of this going on. And we're now in the second half of September, right? So we've got all of that working for us, for those of you that want an actual pullback. All right, moving on. So let's go over to the charts real quick. Now the Nasdaq was up 9 straight days in a row. As of now, it may not do that. 7, 8 more points, and we can actually have 10 days up. 9 days up in a row for the Nasdaq is the most that it's had over the last 2 years, really. Hey, actually, I'll show you. So here is just streaks of positive days for the Nasdaq. We've got 9 days right now. Maybe we get to add 10 to it. You can see how rare that is. Not normal for the Nasdaq to do that. Not normal for the S&P to do that either, but that's where the Nasdaq stands. So when you go back to that, we have the Nasdaq also extremely overbought, and mostly due to some of the larger, heavilier weighted names in the S&P or in the Nasdaq. And so, fine. We're now only 4 points away from going positive as of the time of this recording. So we got about an hour left to see what happens. But now you know that's the case. What's happening there? Very strong. Nothing extremely exciting for today. Again, same in the Nasdaq. People going, just wait for the Fed. We'll just see what they do. I don't need to do anything crazy here today, and I tend to agree with that. All right, fun fact. Let me hit you with this one. So when a president has usually when a president has back-to-back terms, we'll compare performance term 1, term 2. In Trump's case, we had a gap, right? So there's a Biden period in there. So it's not back-to-back, but a lot of people track the performance of his first term versus his second term. And coincidentally, today, we have hit exactly the same performance. So the green line on the screen is Trump's, or the S&P performance from Inauguration Day on Trump's first term to the end. And then the blue line is from Inauguration Day to so far, right? That's all we have up until, last night. We're exactly 10%. Like it just matched, right? So love him, hate him, whatever. I just thought it was cool that happened to match up right at the same time there. Pretty cool. I don't know. I thought it was cool. You tell me. Looking around the market here, Bitcoin's probably the more exciting area today, up about 1%. Crude oil almost up about 2%. If we look inside the S&P, utilities, regional banks, nice pullback there. Not much to report, right? So market-wise, it doesn't make sense for us to bounce around. That's why I've got a lot more cool things to share with you here. You want lower mortgage rates, do you? How low do you want them? So I get this question a lot where people say, you think rates are going to go back to where they were? No. And we can actually go through that data so I can share that with you. No, that is not the case. Now, in the short term here, we have got mortgage rates that have fallen to the lowest in the last year. So stubborn, sticking around that 6% area, but trying to pull back a little bit more there. Now, everybody says, Wednesday, tomorrow, the Fed's going to cut rates. Won't that lower rates overall? Can we get that sub 4% interest rate like we were used to seeing back in the good old days? No, sadly, that's not going to happen. Here's how you can tell. So if we look at the Fed funds rate, now here, let me explain. So the blue line is in between the upper and lower end of the range. So the Fed will say like our target range is between 3.25 and 3.5. So we just took the middle of that so we could plot something here. So the dots that you see, so actually the blue line, that's where we stand right now. So if you look at the dots and we're going forward into next year and then just about the year after there, these are the actual current pricing of Fed fund futures, meaning what people are betting on, not an opinion or a poll or whatever. This is actual money making these bets. Well, here's the trouble. The current projection is that if this happens, then we only cut down towards that 3% mark on the Fed funds rate. And they've actually kind of mentioned their terminal rate being somewhere around 3%. So far. So if we do that, then it only puts the 10-year, that's the dark blue line there, it only puts the 10-year just under 4%, right? The 10-year yield anyways there. So there's currently no pricing that suggests that mortgage rates, I should say, are going to fall under that 4% like, we saw in the past there. So I hate to burst your bubble there, but that is, that's where we stand. All right, moving on. Hey, did you see, you probably never heard of this guy. His name is Mark Stevens. He was an early investor in Nvidia. And just today, the other day, he sold $600 million worth of stock. Now, granted, he's owned it forever, but sells $600 million, sold $400 million earlier in the year, sells $1 billion worth of stock. And he has a venture capital private equity firm called S Capital. So I'm like, Mark Stevens, I'm not going to pretend I knew who the guy was. I looked him up. I'm like, oh my God, he's worth $10 billion. Half of that's Nvidia stock, so well done. But I look him up and I'm like, oh, he's got a website. So I go to S Capital, right? I look it up. There's nothing to it. It's a basic site. I scroll, I'm reading about him. I'm like, hey, good for this guy, right? I go down to the bottom and it's a free website that he used Squarespace. Did you know that? It's a free website. So he goes on Squarespace. He's got $10 billion. He gets the free build a website thing. And at the bottom it says powered by Squarespace. So just know, anybody can do it. If you make a lot of money, doesn't mean you need to have a fancy website. I just got a kick out of that. Thought you guys would enjoy that. Okay, a couple other things, and then we'll get out of your way. So let's go over here. Some fun we can have tomorrow. Cracker Barrel is going to report earnings. Do you think that's going to be an interesting conference call? You can call in and ask questions if you want. But yeah. It's the first conference call in a while I think I would like to actually listen to because of General Mills going to report here. I've been watching that for a long time. It's just stuck right there at that 49 to 50 area. It just won't go any higher. But they have earnings tomorrow. They beat 73% of the time. They have missed 6 of the last 8 earnings reports. So that does not lend well to the stats that I just gave you, but so be it. Webtoon. You'd never heard of it up until today. Webtoon is it's popular overseas. They're based in California, I think, but they're more popular overseas with the anime type commercials and stuff. They're going to work with Disney to create their version of Disney comics and cartoons and things. Great news, right? You got to deal with Disney. Nobody's complaining there. Microsoft raised their dividend about 10%. It's about 8.5 cents a share. If you care, if you watch the was it Crawford and Canelo? Canelo. I always get that wrong. Fight on Netflix there. Netflix says, hey, we got over 41 million people to watch that one there. Great. We got a TikTok thing going on. If you like TikTok, you might be in good shape. Oracle's going to be helping with the operations there. And ByteDance, which is the company that owns TikTok, is going to be working hand in hand with them. So it doesn't look like TikTok is going to go dark anytime soon. Dave & Buster's misses on revenue there. I totally get that. Tricky one there. And this is a typo in some news articles that I saw today. President Trump announces a $15 billion defamation lawsuit against the New York Times. Many articles said 15 million. It is not million. That guy doesn't sue for millions. In this case, he's suing for billions. And that's about it. So tomorrow, really, Cracker Barrel will be a fun one to see in the morning. That'll give us something exciting, or I should say interesting to talk about through the morning. But then after that, the focus is going to be on the Fed. 2 o'clock is the Fed announcement. 2:30 is the Fed press conference, which remember, they didn't start doing that until 1994, I believe. So everybody will be looking at Mr. Jerome Powell to see if this, right? Let's call it the dot plot in this case. That's not what that is, but let's just call it that. Is going to be on track, or what's he thinking going forward? The assumption is for 1 more rate cut this year, 2 more next year, and be looking for confirmation on that one to see what happens. Hey, we'll join you then. Maybe we can do it live I want to watch it. Do it after. All right. Otherwise, hey, thanks for watching. I hope you enjoy the rest of your day, and we will see you later. Be sure to hit the like and subscribe button, all that stuff I'm supposed to say, and check us out at jazzwealth.com. Adios.
We all want more. Let's open the door. Introducing the Dose Score.